From the floor of the CME Group, this is Danny Riley, and it is Cash Clues. Yeah. And the name of this video, oil plunges to 29.75, and the S&P goes for the ride. The high of the day in the S&P came in at 1895.5 midday. The low came in at 1868 even late in the day. And last, were 1868 half, were down 32.5 handles. Total volume, 1.65 million minis trade and 4,000 big S&Ps trade in the pit. The MIM started showing like 100 small to buy, like 96 million to buy, and eventually came out to like 150 to 200 million to buy, and the actual MOC came out by 410 million. Now, I neglected the eco calendar, but I know that there's a lot of earnings out this week, and I know that this week's total economic schedule only includes 18 economic releases, so spread out throughout the week, it's not all that much, but the big thing will be the FOMC minutes, or excuse me, the FOMC two-day meeting that starts tomorrow, or if you're looking at the video Tuesday, today. Now, it's a rough day for the S&P, and I keep trying to tell people that these big figures matter in the S&P, 18 even, 19 even, and I don't think anybody really listens to that, but at the same token, it's okay. It's just, what it is that you're not going to be able to get a clear shot on the upside for the S&P unless crude oil acts accordingly. And it wasn't acting very well at all today. It just continued to slide late in the day, and the S&P went right with it. If you put your crude oil chart up against your S&P chart, they'd almost look identical. Maybe they're coming back up a little bit late. No. But look at the end of the day, the S&P goes out down 1.56%. The NASDAQ goes out down 1.58%. The Dow futures go down like 1.3%, and the Russell's, what got really killed, down 2.3%. Wow. So this is why I've been trying to say that I don't want to go jumping into the bulls camp and then have the bears run me over again. I'm playing both sides of the market. In fact, I sold the highs of the day today, but again, I didn't hold on. Made good money, but didn't hold on. And had I held on, I was talking about this on Twitter, or on Periscope. If you have the ability and the patience to put these things on and get them right, you can make 20, 25 handles on these trades, but not Mr. Impatient. Okay, listen, I want to do a little shout out to the guys that helped out on the MrTopStep webinar on Saturday. It was an exceptionally good webinar. Jeff Hirsch, you're my man. I saw you on CNBC today. If I was CNBC, I would have you on as a regular guest. And to Witter and Lister, Wayne, thank you very much. What you did complimented Jeff's stuff, but in the same token, I believe that Jeff, someone that pretty much knows pretty much all these seasonal statistics, was starting to learn a little bit about your toy and your toy indicator, excuse me. And then Michelle came in today, or on Saturday, came in and talked about the Fed balance sheet, which was great. I did my little thing, and then Marlon came in and talked about the MIM real quick, and then we shut it down. But overall, really great response from the webinar. And last but not least, look, I don't know how the S&P is going to go here, but I have a feeling that the way it's going out today kind of looks like there could be some further weakness. And the other part about this is that I think, as I said on the forum and into the Twitter, that I think the S&P could be weak in the beginning of the week and then firm up a little bit late in the week, because there's an end of the month rebalance, and I think it's Credit Suisse that's saying they've got 11 billion to buy in stocks on the rebalance. But I want to let everybody know, if there is 11 billion to buy, a lot of that will be paired off. But just the fact that there's a big buy rebalance at the end of the month may mean the stocks could go bouncing back up a little bit later in the week. We'll leave it like that. FOMC meeting on tap. I don't think there's going to be much of a rate hike this time. We'll see you guys tomorrow on the opening print.